Good morning. I'm Richard Calhoun, real estate broker in Silicon Valley for the last 40 years, working with consumers, buyers, or sellers. Today, we're here to discuss the real estate market and the impact of COVID. You can get to this meeting by using my root URL, which is tinyurl.com/RE market graphs, and then adding the year code, which is just 2021. The handouts are normally available by adding the word handout and the full date code of 2021-0206. For reasons we will discuss in a few minutes, I do not believe I will post the handout this week. I do expect to resume that next week. Then we go down to wanting to look at the archive of this session. You same root URL, and then you put in just the 8-digit date code 2021-0206, leaving out the word handout, and that will take you to the YouTube version. Here is the data from last week, and we did not update it for this week. So this is the magnitude of overbidding. I don't expect there to be much change. I do hope to bring this back next week. I do anticipate being able to discuss the data for the month of January, which would be starting on January the 1st, going through and including February the 4th. This is the frequency of overbidding. Again, this is last week's data, and this is days of unsold inventory. Again, last week's data. This is current data, and this is days of unsold inventory. Here you can see that the current year's data, the blue line, is right on top of the gold line, which is the gold standard. I mean, you cannot have a better match than that. And what that's basically saying is we're comparing 2021. To the right of this first purple line is 2020, which is what's labeled up here. To the left, because we're now in week 5, is 2021. What we're basically saying is the first 5 weeks of 2021 are right on top of where we would expect it based on the 5-year normal. And the 5-year normal was 2015 through 19, which were all 5 good years. So essentially, we're having a good year. What do I expect to have going forward? Well, based on what's been happening, I expect to follow the gold line. I do not expect to divert up here on the blue line, which was last year's data, which was caused by the pandemic. I would expect to just pretty much follow this line here and stay in a very strong marketplace. This is a new graph. This is to just give you an oversight of what is happening in a chart, since some of my graphs did not work this week. What we're looking at is the macro area, which, as you know, is single family homes, condos, and townhouses in both San Mateo County and Santa Clara County. This is the number of active listings. This is the number of offers that were accepted in the past 5 weeks, 35 days, and this is what the days of unsold inventory is. Basically, anytime you're between 40 and 80 is a balanced market, below 40 is a seller's market. So at 28, you're a strong seller's marketplace. And that's what I think most people would say. But now let's look at the breakdown. So now let's first look at single family homes. In both counties, the numbers work out to be 25.7 days. So single family homes is faster than condos. And that's significant because the single family homes is a lot more of the market share. So for it to be lower, the condo market is going to be quite a bit higher than that. And in fact, if you jump ahead, you can see the condo market is up here at 33. So the condo market is quite a bit slower. But let's go back to single family homes for a minute. Now, since we're looking at both San Mateo County and Santa Clara, let's look at the difference. Here's San Mateo County at 35, and Santa Clara is down at 21.8. Let's call it 22 days. So Santa Clara County is almost 50% faster than San Mateo County. Why is that? That's basically what I think is a result of the pandemic. People need more space in their home. They're fleeing the more expensive areas, going to the less expensive areas, but still need to get into work occasionally. So people are fleeing Menlo Park and Atherton. The whole Bay, North Bay, has to be being exited to some degree to get to 35 days. But 35 days, don't get me wrong, is still a fast marketplace. Again, remember, a balanced marketplace is 40 to 80. So, this is below a balanced marketplace. So that's still a seller's market. It's just Santa Clara County single family homes is just unbelievably into a seller's marketplace. Now, jumping over to condos, the same pattern sort of repeats itself. Both counties is at 33. San Mateo County is at 42. Santa Clara County is at faster at 30. The condo market is slower than the single family home market, and San Mateo County is slower than Santa Clara County. Here we're now looking at the total available listings, the new listings for the week, and also the offers for the week. And what we're doing is we're comparing it to the 5-year normal. If we were having a normal year, you'd be down here on this line. again, this purple line, the first purple line is going from week 5 data to week 6 data. We don't have week 6 data yet in 2021. So this is 2021 to the left, it's 2020 to the right. What's this telling us? It's telling us, first off, the total available inventory is the blue line. So we have 140% of more inventory than we expect. And it's like, how can that be when we're in a hot marketplace? If you get 160% more offers than you normally do, that would put you in a hot marketplace. However, if you dig into the data, the devil's in the details. The MLS announced the Northern California MLS Alliance, and what they're doing is they're basically sharing data. So some of the data now is being reported twice. We're also including some data that wasn't historically included. For example, if a listing agent was in San Francisco and got a listing in San Mateo County, they may have only put that on the San Francisco MLS before. The Santa Clara County and San Mateo County MLS listings would never have seen that listing. That is now coming over and being seen. By doing the data share, we've increased the number of listings that are available to be included in the database. We also, since the transition started and took effect basically January 22nd, we also have some agents that would have been in San Francisco listing it on the San Francisco MLS as well as the San Mateo County listing. So we have some properties that now have 2 listings. Up until recently, I had been ignoring it, but I've spent the last week looking at the detail significantly. I'm now of the mind that the amount of duplicate listings is a minority compared to the number of unique listings. So I'm changing over, but there's no way to generate data from 2015 and 19. So you just have to be aware of that difference. I could try to correct it, but I have a firm belief that I correct the data as little as possible. I essentially correct errors, and then I explain anomalies and let everybody make their own adjustments. So now the next thing is you look at the gray line, the number of new listings, and that's coming way down. And this is sort of a puzzling mint because now we've only had 100% of the new listings in the last week. But if with the data share, we should be having like 110% of the number of new listings. So we're actually having less new listings than we expect. Why would that be? My first guess is we're approaching April 1st. April 1st is significant in the fact that people can now transfer their property tax up in basis. And I think we're getting close enough that people are saying, let's wait a week or 2 so that we can come on the market the property, have a normal escrow, and be closing on April the 2nd. So I think what we may be seeing with this steep decline is back here, people coming on the marketplace were saying, no, I'm not going to wait 4 weeks. I'm not going to wait 6 weeks. But now it was only 5 weeks, 4 weeks. And all of a sudden at 3 weeks ago, yeah, I'll wait 3 weeks in order to be able to move my property tax. Just a wild guess. I think that's what's happening. Time will probably tell. It will be hard to tell why the market is acting the way it's doing, but we'll be able to see if the market is reacting that way. So basically what I'd expect is in about 2 weeks, I'd expect this gray line to start shooting way up because I think there's a lot of people, consumers that are going to take advantage of Prop 19 and start moving. So again, time will tell. The next line and the last one is the demand side. Those two are both supply. It's this red line coming down, and that's the number of offers. And so you can see offers are basically at 140% of what you'd expect them to do. And again, part of that is now you're reporting extra listings. Part of it's you're in a hot marketplace. And you can see a year ago, we were just having a normal marketplace. So we have quite a bit new volume. And gut number was only about 10% of that from the MLS activity. So we have about 30% more offers being accepted than you would expect at this time of the year. This is now looking at the total number of listings that are available on the marketplace right now today without any offers on them. And again, that's the blue line. So you can see you're at 1,500. Normally you're down here somewhere around 1,100. So you have 400 more listings. And this is both counties, Santa Clara County and San Mateo County, both types of properties, single family homes and condos and townhouses. And the drop coming through the purple line is just going from last year. So last year we had exactly normal inventory. This year we have quite a bit above normal inventory, and that would normally tell us that the market should be slowing down. Again, I don't think that's what's happening. Part of that's data share. If you come back here and if you had 1,100, that means you should be at 1,220, which is about here. So you still have 250 more listings. Why are 250 more people listing? I think it's because of the pandemic. People need more homes, but we're also having the matching increase in demand. And so the market's going to stay in balance just with higher volume. Down the road, I suspect we will pay for the price and reduce volume, but Prop 19 will kick in, and I expect that to have a huge impact on volume long term because now people over 55 can sell their house 3 different times and transfer the property tax, and that will free up some movements. Now we're looking at just the number of new listings in the given week. And you can see here, week number 1, there was a big difference. Week number 2, big difference. Week number 3, big difference. Week number 4. But now all of a sudden here in week 5, they're right on top of one another. Yes, the volume has gone up a little bit, but look at how much it went up last year. So, and this isn't last year, this is 5 years. So this data pattern here is real. And this is probably Martin Luther King's birthday here, the holiday. And so that's reflected in this year. But this line here, this blue dot, you should have expected to be way up here. Again, I don't predict the future. I just report what's happening in the market rapidly. It's going to be interesting. Do we come back and follow the gold line? Do we go up? If my hypothesis about Prop 19 is correct, I'd expect the blue line to stay on the gold line. If it's just a statistical fluctuation, the blue line should be above the gold line, and next week we'll be able to tell. Now we're looking at the number of offers, and if you look at this, the increase in the number of offers is actually greater. And again, why is that? Holidays are having less impact, so there's normally an impact the week after the holiday with more activity or less activity. And that's why this is sort of the plateau a week later than the drop in the inventory that we saw in the previous slide. This year, with the pandemic, holidays aren't impacting the real estate being an optional event. And so the difference is much higher. What do I expect? I expect this delta to come down a little bit, but I expect the number of new offers to be above. Once we get past about March 1st, I'd actually expect the number of new offers to increase again because of Prop 19. Here's the frequency of overbidding. This data is updated here, so you can see that we had a big increase from last week. I am still really bothered by the sawtooth method. It does not make sense to me. If I'm looking at both counties and I'm just looking at how much a buyer's willing to overpay, the frequency of that overbidding, last week only 50% overbid. The week before it was 60%. This week it's 58. I just would not expect that kind of weekly fluctuation, but you can see that it's in the data all along. I am leaning strongly towards investigating, looking at plotting multiple weeks to try to normalize the data. And what I'll look at is 2 weeks, 3 weeks, 4 weeks, 5 weeks. If I was to guess right now, I'll probably use 2, 3, or 5 weeks. And the reason for that is 1 week does not appear to be enough. 2 weeks, would take care of quick perturbations like this, and they appear to be quick. 3 weeks would just smooth it out even more. 5 weeks, because that's what most of my other data is on. Here's the magnitude of overbidding. You can see the same sawtooth effect, way down last week, back up, and now, no way of knowing what's going forward, but I'd expect it to be roughly along the red line from last year, except I don't expect this dip down because that was COVID. So I'd expect it to come along something like this. And as we get further away from the pandemic and more used to it, I expect that the magnitude of overbidding will increase. And, you can see long term, right as we started to be able to sell property, people were paying right at 100%. It sort of came up to 103%, and then it was stable. And it almost looks like now we're breaking through and going up to 104%, but then down to 102%, now back up to 103.5%. It's surprising. This is current data, as you can see up here, February 6, 2021 today. It's data through yesterday. The data you're looking at is the red line that's buried sort of right through the middle of here, which is hard to see. But what you're doing is you're comparing the red line, the current week data, to the past week data. And you can see basically, it's been in a pretty tight little window going up and down depending on the different fluctuations. So the fluctuations that look severe in the previous graph don't look so severe here. But if you went from line to line, like this green line, which is January the 2nd, it's very low on the line. And then if we could find January 9th, which almost looks like it's, well, I would say it's either that line right there or this line. There's a dramatic increase. And that's the kind of jump that I would not expect to see from one week to another week. Here is the same data, just taking away some of the older data so you can see it. So now the red line's a little clearer, and you can basically see it just coming down and acting fairly normal, fairly clustered together. This is only going back to basically Thanksgiving, November 21st, up to present day. It's looking at the distribution of overbidding. As these lines move diagonally up this direction, the market heats up. So the hottest week we ever had was this gray line, which was just January 23rd, bouncing versus a trend. And I would actually have expected a trend, and I'm surprised that's not what I'm seeing. Now I'm looking at, and this is a little confusing, most of the lines on here are December. So that would be December 1st through January the 4th. And that's because there's 31 days in December. The red line is actually data from January 1st through February the 4th. So I'm comparing January's data to December's data. And normally that would be problematic, but because you're looking at closing data, you're really comparing November data to December data. So it's not something I don't like to do, but it's on there for reference. But this is sort of, the red line is the current data. The other ones are historical. I would have liked it to be January data. I just don't have it. Now we're looking at single family homes only in Santa Clara County, and this line is markedly different. This is the hottest marketplace, and that's what people have to understand is different marketplaces act differently. So here you're having the second best, well, you're having the best year, 2021, the current month of December. And again, I'm comparing January to December, so it's not fair, but this January is better than any Decembers other than the best December we ever had, which I think is going to be December of 2017. That's pretty telling. There's no way it's going to be down here though, like at the worst. Next week, I should have everything normalized for it. And this is the same data set, just some of the older data removed to make it easier to see. Again, this is last week's data, so I won't spend any time on it. This is not updated, so I won't spend any time on it. And I think that brings me to an end. So I'm open for questions. All this data down here is all from last week and nothing's been updated. So there's no reason to discuss it. So with that, unless there's a question, I will end it a little early and try to recover and get monthly data as well as weekly data for next week, because all this data here has not been updated. Any questions?